How you doing, guys? So in today's video I'm going to be talking about one of the newest companies that I added recently to my IRA portfolio, and that is Walmart. So I hope you guys enjoyed the video I made a couple videos ago about the best retail stocks to buy, and one of the top ranked stocks I had in that video was Walmart. So I've been doing a lot of research on Walmart, so I wanted to just give you guys some quick information about it so you can make the best decision for yourself and your portfolio. So Walmart, it trades on the New York Stock Exchange under the ticker WMT. And here are some key facts about Walmart. So they're the Fortune 500 number ranked company for 6 years straight. They're America's largest retailer, and they have 11,200 stores in 27 countries. So countries like Brazil, Costa Rica, even stores in Botswana. Now, all of these stores aren't Walmart's. They're either under Walmart's name or other brand names, but they have a nice global distribution channel, and a lot of their profits are coming from overseas as well as their e-commerce stores. So a couple of key financial highlights is a price to earnings ratio of 24, so that's pretty reasonable for a company this large. There's a 1.75% dividend yield. They are $344 billion market cap and 44 years of consecutive rising dividends, guys. So really solid company, and I want to just quickly go into the Q3, their latest quarterly reports. I can show you guys some of the things that kind of jumped out the page at me, and one of the reasons why I decided to add this stock to my long-term portfolio. Okay, so first we're at the Q3 fiscal year 2020 earnings release, and I wanted to show you guys some very interesting numbers that kind of jumped out at me that are, I think, not only important for Walmart but important for the overall growth of the retail industry. So same-store sales grew 3.2% in the US, and what I really was shocked about was the US e-commerce sales grew 41%, guys. So, you know, everyone's talking about how Amazon is kind of putting a lot of retailers out of business, but what we're seeing a shift to basically online sales in general, and that 41% gain by Walmart is a really nice number. $1.15 earnings per share, and like I said, strong numbers overall. Total revenue $128 billion for the quarter. That's a 2.5% increase. Same-store sales increased as well. E-commerce sales up 41%, as I mentioned before, and also international. So Walmart International, $29.2 billion in net sales, and then they also added the inclusion of Flipkart. So that's kind of a way for them to build their brand overseas. That's a very nice acquisition there. And I'm going to talk a little bit more about Flipkart and kind of the trends that I've seen. So, you know, operating income did decline a bit, but like I said, the company is still profitable and things like that. So I just want to show you guys some more numbers in the presentation. Okay, so if we go to the Q3 fiscal year 2020 presentation, it has a bit more insight into what's going on here. So as we go down, we can see that the revenue numbers look good. Everything looks nice. So I want to talk a bit about where the trends are moving in terms of. So one of the nice things I also like to do is I also like to see companies that are repurchasing shares. They're constantly repurchasing shares and paying out dividends. So this is kind of a way for them to return money to shareholders. And then also let's look at some of the quarterly numbers as well. Strong sales trend continued across most key categories. And this is another thing that I noticed. So as of Q3, we had nearly 3,100 grocery pickup locations, more than 1,400 stores with same-day grocery delivery, and 1,400 pickup towers. So what we're seeing now is transitioning is that more and more people are realizing that it's not necessary to spend hours shopping in the grocery store. It's much more efficient to simply buy your items online and either pick them up or have them delivered to you. And the fact that Walmart is embracing same-day grocery delivery, that's a really nice way for them to compete with Amazon, because Amazon's doing the same thing with the Whole Foods market, and also competing with food delivery services like Uber Eats and things like that, Grubhub. So this is kind of a way for Walmart to compete in that market where people expect their food to be delivered on demand. Okay, so now let's go into some other numbers. Go into international numbers. So one of the nice things I like about Walmart, and one of the reasons why I think it's really nice for people that want international exposure, is simply the fact that they're a global brand. So they're also in Mexico, Canada, China, things like that. And China is a huge market. I'm going to talk a bit more about how they're going to grow in Asia in the future. But as you can see, our sales are up in every other key market except for the UK, which numbers are down. So here's some of the international numbers. Net sales grew 4%. And in China is what I really want to focus on, because China is a huge e-commerce market. So here we go. Net sales increased 6.3% and same-store sales 3.7%. But check this out. E-commerce sales in China grew by 99%, guys. So almost doubled their e-commerce sales in the quarter. So that was a very nice number. So let's and of course they have Sam Club, their other brands. And so let's talk a bit about that Flipkart acquisition. Okay, so Walmart last year invested in Flipkart, and they're just starting to kind of integrate one of India's biggest e-commerce platforms into their business model. And this is one of the reasons why I like Walmart as a stock long term, because they're very aggressive about growing overseas. They're already growing their sales in China. As you saw, I mentioned earlier, they increased their China e-commerce sales by 99%. And having a majority controlling stake in Flipkart will help them do this. So they become the largest shareholder in the Flipkart group, and they paid $16 billion for a 77% stake in Flipkart. And as they say, India is one of the most attractive retail markets in the world given its size and growth rate. And our investment is an opportunity to partner with the company as leading transformation of e-commerce in the market. So what basically Walmart is doing is they're doing it similar to Uber. Instead of trying to just kind of make people buy into their brand in other countries, which I know is very hard because people have brand loyalty, they're simply buying a controlling stake in the brand leader and using kind of that local brand to own a big market share, because in foreign countries people might not necessarily associate with an English sounding word like Walmart or something like that. So by basically investing in the market leader, Walmart is able to own that market without having to get people to buy into the Walmart brand. A lot of different companies do that. For instance, Uber does this. They have a major stake in a ride-sharing platform in Asia called Grab. It's very popular in Southeast Asia. And this is kind of the new trend of these companies. They're just buying a controlling stake in the market leader instead of trying to compete directly with someone who already has market share. So very good strategy. So now I want to quickly talk about Dividend for you guys that are income investors. Okay guys, so I actually use Dividend.com to do a lot of my research on dividend stocks. Very nice website, and it's actually free to sign up. So if we check out some of the stats, we see that there's a dividend yield of 1.76%. Annualized payout is $2.12. That's paid quarterly. And the payout ratio is 43%, so lots of growth there with that payout ratio. And they've been growing their dividend for 44 years consecutive. So very nice numbers here, guys. As we can see, we just missed the last ex-dividend date, and right now the dividend is about 53 cents per share per quarter. So very nice numbers here, and they've been growing their dividend for 44 years consecutively. So that's going to allow you, if you buy the stock now, that's going to reduce your dividend yield cost year after year as they continue to increase the dividend, and you're going to continue to earn a higher return because you bought the stock at a cheaper price. Now, of course, the past is not indicative of the future, but as long as they continue to expand overseas, as long as they continue to grow their same-store sales and invest in their e-commerce platform, which is the future of just shopping in general, I think Walmart is well positioned to do very well in the long term. So I own them in my IRA account. Very happy to be a Walmart shareholder. So guys, also please do your research. I hope you found this video useful. If you like it, please give me a thumbs up, like this, and subscribe, and let me know what you think about Walmart. Are you buying? Are you selling? Are you holding? What are you doing with your shares? So that's it for now, guys. Till next time, take care.